Hi there, Internet. My name is ᴜsᴇɣᴜ, and I am one of etoro's most copied popular investors. I get asked my opinion about stocks quite often, but my process of analyzing stocks is quite in depth, and so it's quite time consuming. But I did want to share the analysis that I perform on stocks out in the field, ones that I find promising, so that people can learn from my process and hopefully be able to do some of that analysis themselves. Alright, let's take a look at today's stock. Alright, today I wanted to look at a stock that was actually found by people within my Discord server. So a fair number of people there are pretty good analysts themselves, pretty good investors too. And so they mentioned this company to me and a few other good points, and that got me interested in looking into the details of the company. So the company called Huami is now called Zepp. They recently changed their name to Zepp Health. They're a very interesting business, and I'll give you a little bit of an overview as to why. So, as I've told some of you before, I love using Wikipedia as a first stepping stone when doing my research. There is no Huami Wikipedia entry, so you should note that they are a Chinese business. They're listed on the US stock exchanges, but they operate within Asia, including India. So, a quick Google about them. There is no Wikipedia about Huami, but I could see there's an Amazfit, which I've looked into. That's the brand, their own brand of wearable devices, and Xiaomi is a company that is heavily involved with them and their operations. So you can see here that Xiaomi owns almost a fifth of the company, and Xiaomi's CEO owns another fifth of the company. And Xiaomi is a fantastic business. A lot of people call it the Apple of China, and they've fallen afoul of the US government recently. US investors will no longer be able to invest in Xiaomi come, I think, November this year. But I had been a long-term investor in their company up until a month or two ago. And so a successful company and investing in another successful company, especially on a personal level, is interesting just on its own. You can see that some people are calling them the Fitbit of China. And for those that follow the news, you will know that Google bought Fitbit for a couple $2 billion not so long ago. Alright, so quickly looking at Huami, the first thing I want to know is something about their company. So they call themselves a cloud-based healthcare services provider with world-leading smart wearable technology. So they're a wearables company. Part of their move to become Zepp Health is because they want to focus their brand and make people think of them as a health tech company, not just as a technology company. So they have, in 2019, they shipped a lot of wearable devices, quite a lot more than if I were to double check that I think Fitbit was shipping. So Fitbit wasn't doing very well towards the end, by the way, but you can see they never got to the level of sales that Huami has gotten to. Not only do they have wearable devices, they also have a lot of data and AI over that data that helps with analysis of that data. They also have obtained approval as to class some of the devices as medical devices, which is very interesting. And they have a mobile app that ties into their ecosystem, and they have, as of 2017, which is a long time ago, they had 56 million users. They also are the most preferred partner of Xiaomi, and this is quite interesting. This is how they kind of got their leg up initially, and it's something that represents the chief risk about the company, but I think they've successfully navigated that risk. You probably want to know a little bit something about the size of this company, and we can see that it is a relatively small company at $1.75 billion in terms of market cap, and that their market cap to revenue, their price to sales is actually decent. We can also see that their revenue has been growing fast for a long time, sustained strong growth in revenue sales, in revenue, and they're profitable, which is rare especially in US tech companies, particularly in those that are growing fast. We can see that there was a bit of a dent in revenue in 2020, and we can look a little bit into that later on. But at a headline level, a very healthy, well-priced company so far. I do also use Crunchbase to investigate companies, and you can see that Huami sells more of these types of devices than Apple or Fitbit. And as I mentioned before, Google acquired Fitbit. Fitbit feels like the most natural comparison to them. I have had a look at their product set, and they are very nice looking devices. So they have their own brand of wearable devices, and there's a range of them, from the cheapest of the cheap through to the products that you would use maybe if you were a bit more enthusiastic about this type of thing. So the product set is really good within their own lineup. I then looked a little bit at Xiaomi because I was interested in the relationship between the two companies, and I could see that Xiaomi has their own wearable band called the Mi Band. And if you do a quick Google for this and research it even just a little bit, you'll find that this is a loved device. So it's not just that the review sites are giving it 5 out of 5 and 9 out of 10 stars. It's that the people that have the device themselves really, really love it. And so the picture is becoming a little bit more fully formed. We have a company, they have their own line of wearables, they're expanding, they're focusing on health tech specifically, but also their products are doing fantastically well in the market. What's also interesting is that the Band 5 was the one that shipped last year, and they have a new one coming this year. So these devices are quite interesting. They're not like the Apple devices where they're premium and the upgrade cycles are quite long. Instead, they tend to ship upgrades fairly fast, so that the upgrade cycle is quite short, so you're getting people buying the new versions all the time. So then looking a little bit more into the analysis, I found that Xiaomi, not only do they had this partnership historically, they've just announced that they've added another 3 years onto their deal, and this was just in October of last year. So, like I said earlier, Xiaomi has given them a leg up. They're standing on the shoulder of Xiaomi as the giant, and that represents the major risk because a lot of their revenue, a huge portion of their revenue, if you look at their books, comes from Xiaomi. But they have spent time in recent years diversifying away from the strong single source of income. So they've expanded their own brand, the product set that they sell. They'll continue to use Xiaomi as a bit of a lever to help them grow. But that would have been the risk initially. I think that this risk is mitigated in a few ways. So I don't think Xiaomi is going to pull the rug out from under their feet if they own a fifth of the company and the CEO of Xiaomi owns a fifth of the company. So there is some risk, but I think that they've run the business quite intelligently so that risk is massively mitigated. If you look at recent news about Huami, it's not just that they changed their name and their branding to be more health tech focused. They've also partnered with and acquired pieces of businesses that would increase their access into the health tech industry, which is fantastic. This shows that when they have a plan, they don't just talk about the plan, they execute that plan. In terms of analysis, I do like to look at both the bearish, neutral, and bullish views. And so this was an article that there aren't many bearish articles about Huami out there actually. But this article emphasized specifically that they thought the sales of the Mi Band 5 were going to be bad, which they weren't. They sold a hell of a lot of the devices actually. So this negative article was one of the few recent negative articles, and it doesn't really apply to the situation. And then this author, they kind of summarize more or less what I've just mentioned. So they've extended the deal with Xiaomi. By the way, the knock in profit that they had through last year, Huami this is, was because they've been pouring money into R&D. So not only are they a company that's growing fast in terms of revenue and profit, they're taking that profit and they're reinvesting it into their company to further diversify their product set and to continue to grow. And the fact that they are moving into the health tech kind of industry, and that they're in the Chinese market is also fantastic for them. I did have a look at their most recent earnings report, and the numbers are all very good, but sometimes in the earnings reports you find little tidbits, little pieces of information that you can't really glean from the tools like Stockopedia. But there was nothing. There's a bit of detail here, but there's nothing that's really pricked my ears up. And so looking a bit deeper into the finances, the valuation on the company looks a bit iffy, but if you understand what drives these numbers, you realize very quickly why. They're a high growth company. They're taking their profits and they're putting them back into R&D, which reduces the profit lines on the books. But actually, they're a company that has a lot of cash on hand. They have no debt, and they've got a decent amount of working capital, which you want for this kind of business. In terms of the sales compound annual growth, so over 3 years, they've got a 55% growth in sales. And if they continue to grow their sales at that rate, and they continue to grow their profit at this rate, this market cap is way too low. This company could very, very easily become a multi-bagger. All right, so I've just highlighted the line here where they talk about why they changed the company name and refocusing the brand. I know it seems like a small thing to change the company's name, but it really does help the public's mind focus on what the company wanted to focus on, which in this case is, first of all, it's easier to say Zepp than Huami for most Americans, but also because the name reflects their focus on health tech, it will help focus people's minds, consumers' minds, on the kinds of things that they can get from them. All right, so that's a bit of a whirlwind tour of my analysis process. Once I have finished with this part of my high-level process, I usually look at every single product that they historically have had, how the sales have gone, what the forecasts are like, the people that are running the business. But from what I've just shown you right now, you can probably see that this is a business that is quite exciting to me. I do see 2 risks, and I would need to monitor those. I do have positions in Huami, by the way. And those 2 risks are, it's a Chinese business. And the US and China do not have the best relationship, as you can see when it comes to Xiaomi itself. The second is that because it's a Chinese business, sometimes the data about the actual business arrives in our Western news sources a little bit later than I would like. So slow information flow means that I can't react as fast as I would like to if something does go wrong. And also the tensions between the US and China are risks that we need to keep an eye on. But besides that, this looks like one hell of a fantastic company. All right, that's it for today. Hope you enjoyed the video. Speak to you soon. Bye.